In this video, guys, I'm going to talk a little bit about expecting the unexpected, some of the things that have occurred and how we can take advantage of them, and at the very least protect ourselves. Stay tuned. Hey guys, a very warm welcome to you. So, expecting the unexpected and anything can happen is something that any trader will always have etched in their mind. Any trader who's been in the business for more than, say, a decade is definitely gonna have a story of, wow, I never expected that, never expected that. And the funny thing is, even in my short almost 20 year career, there's been a dozen or so things that just no one's ever expected. Now, you can't use hindsight bias and say, well, you should have seen that coming, because that's the whole point of an unexpected event. No one expects it. Hardly anyone's positioned for it. Of course, some people are positioning for the subprime crisis. That's the Big Short was all about that. Some people have hedges has paid off with the recent coronavirus crash, but you get the idea. The idea is that it's not expected. If it was, it would be priced in. That's why we get such extreme moves, because it's unexpected. So we look at all these things here, and we'll look at them in a moment. I'm going to talk a little bit about them. But number one thing is we want to protect ourselves, guys, and accept risk, and understand that if we have risk in the markets, especially if we're using margin, then we are at risk, and anything can happen. And a good example is the S&P peg, lifting the peg, and we just saw that huge move in the Swiss franc, and regardless of whether you had a stop or not, you were going to get hammered. It was just the way. If you're on the wrong side of that move, you were going to get hammered, and you were going to owe your broker some money, and some brokers swallowed that loss, some brokers didn't, but that's by the by. I've done a video exclusively on that before. But the point is, if you're trading on with margin, you have to accept that you do have some risk on the table, and you can't control everything. Now, that being said, we can of course use stop losses. Some brokers allow you to use a guaranteed stop loss. You can hedge yourself a little bit by having kind of positions that are some long, some short. You can use options. There are other ways of controlling your risk, but at the end of the day, risk is risk, guys. If we're taking any risk and we're looking to get reward, we're gonna have to take some risk, and there's always an outlier chance we could be on the wrong end of it. But there's also an outlier chance we can be on the right end of it. And that's one thing I want to talk about in a moment when we go through some of these. So, flash crash, that was crazy. We didn't expect it. We had 1,000-point down day back up. Some people say it was that guy sitting in his semi-detached house in Hounslow. Some people say it was a company that was doing HFT. Who knows what caused it? It was there, wiped out a lot of people. Some people made a lot of money on that. I remember I think I've done a video on this specifically as well. I've done a video on most of these guys actually. Flash crash, I remember listening to the pit audio, and that was really, really useful on the day. So flash crash, what do you do with that? You can't do anything. Sometimes you're going to get stopped out. You might make a lot of money on it if you're there trading it. S&P peg, of course, just talked about this when the Swiss lifted their peg, and then Swiss franc went crazy. If you're on the wrong side of it, you're going to get hurt. It's as simple as that. Bitcoin. Now, this is where we get to kind of adjusting it, flipping it on its head a little bit. First, we always want to control the risk as much as we can. But the other thing we want to do as traders, guys, is to not limit our gains. Bitcoin, I wasn't involved in Bitcoin much. I had a few little dabbles with it I've shared before, but I've never really got into it, the thick of it, as I know many of you crypto traders have. But a few trades, fine. I'm happy with the kind of my lane that I'm in, trading the assets that I trade. But anyway, Bitcoin went way more than people expected. When it's sitting at 1,000, people are like, "Whew, that's high." 2,000, 3,000, 4,000, 5,000, 20,000. You get the idea. The point is, even if that's, and the same with Tesla. When Tesla was going up and up and up. Now, some people might say, well, Tesla's well worth $900, and fine, it's fine. But the point is, it moved so quickly for such a big stock, a big company, moving so quickly, so aggressively, going to 200 to 400 to 800 for this huge company. You're not talking a small biotech here. It's just unusual. Not quite as unusual as maybe some of the others, but you get the point. Now, the idea is with these guys is that, if you are long an asset that is running, give yourself the chance to make a real jackpot trade. Don't stifle that trade. Have a plan to be able to run a trade, because it's the best feeling in the world, guys. If you're on a trade that just runs like 10 times more than you expected just because you're trailing it, there's no nicer feeling. And of course, the P&L boost that comes with it is great. So, whilst it's fine to be hitting the singles and the doubles and taking those mean reversion move to move trades, give yourself the opportunity to really capitalize on some big moves. If you're on the end of a big move, then hold the thing. See how much you can get out of it. Be prepared to give back a good chunk of gains to see how far it goes. Those that are in Tesla and saw the breakout to 400 to 420, the famous Elon Musk tweet, 450, and the ones who stuck with it and prepared to give back, say, half the gains, saw it going all the way up to 800 or 750 or whatever it was. So, and Bitcoin obviously way more. So you get the idea. It's allowing yourself the option, or at least giving yourself the chance to have the trade running in your favor. All right. May 2020 crude oil, that went negative. Who was expecting crude oil to go negative? Purely because of the supply-demand issue. Supply was just coming on. Here's the supply, we've got to get rid of it. Storage tanks were full up, demand wasn't there. Again, done a video covering this exclusively. If you want to check that out, then feel free, guys. But no one expected that. Very few people did. Unexpected, trading negative, caught some people out. Some people made a lot of money out of it. Again, expect the unexpected. The final thing, guys, coronavirus. No one thought that we'd have a global pandemic. I'm sure there are some people who've been prepared for it, but again, you get the point. The idea is these things come from nowhere, and if you're not prepared or don't have a plan, then many people are still long from the highs. Some people have got away with it because tech's bounced. Some people are long airline stocks and are nursing heavy losses. You see what I'm saying? So preparation for these things, always having a worst case scenario plan. Do I need a stop loss in? How can I hedge my risk? Is the size going to kill me if something crazy comes out? Is it going to actually devastate my lifestyle? There's people who have been margined up with huge positions. Something horrible's come out, caught them out, and they've been on the hook for serious sums of money. Trading's a risky game. That's why we have all these disclaimers everywhere, guys, because it is inherently risky. Now, of course, if you're trading in the UK with a retail broker under the retail banner wrapper, then the ESMA rules at the moment, changing all the time, mean your account balance can't go into negative. But again, the margins are reduced to account for that. So it swings and roundabouts, guys. But it's just understanding that, and also if you're on the end of something, letting it run and run and run. By the way, guys, if you're looking for a broker, check out our channel sponsor, linked in the description below. Otherwise, take care. Keep the risk manager, whatever you're doing, expect the unexpected. It works for you and against you. If you're in a trade and it's running, see if you can squeeze as much juice as possible out of it. Don't be afraid to get into a trade that feels high, as long as you've got a good risk-reward ratio and you've got a good structure around the trade, no chasing. And same the other side as well. If it's going against you, just get out of it. Just ditch the thing. Crude oil is a great example. People who weren't expecting that to go, just kept going, and a lot of people got hurt on it. So be careful, guys. It's the greatest career in the world. You love trading, I love trading, but there's some risk with it. But again, that's what makes it fun, right? It's like riding a motorbike. You ride a motorbike because it's fun. There's an inherent risk there. But at the end of the day, if you can protect the risk and limit the damage if something goes wrong, then you can play, if you like, safely and enjoy trading. Take care. Bye-bye.